Hey, what's up, everybody? Welcome, welcome to another episode of Global Cap FX. Today, I wanted to go over with all of my viewers the importance of establishing support and resistance levels in the market. And I'm going to be going over three reasons, right? Before we get into that, if you guys would be so kind, go ahead and smash that like button, hit the share button and the notifications and subscribe. This will not be the last video going up this week. I plan on sharing a whole bunch of different content so that we can get as many people involved and educated on the importance of really the simplicities of trading and then also the harder parts as well. So the three things that I'm going to be going over in regards to the importance of locating your horizontal levels. One, it gives you more confidence when it comes time to holding your trades. Two, you can locate areas of reversal. Three, you can locate areas where break and retest could happen and you can get in a trade on a continuation. All right, so let's go ahead and get into it real quick. Won't waste any time. Share my screen. So this is my markup for Great Britain, Australia. I'm actually anticipating the market to go down on this one, but just take a look what I have marked up here. So as you can see, you have a horizontal level here. And the reason why I marked up this area is because whenever price came down here and tapped it, it reversed away. Tapped it, reversed away, tapped it, reversed away, tapped it, reversed away, tapped it, reversed away, right? So imagine if you were to locate this as a horizontal level and you said, okay, I want to get into a buy position once it gets back into this region. You know, you put your stop below price action. I would probably do it somewhere around like right here, right? Away from where it could potentially be stopped out. And then you just ride it up. It's a 240 pip move to the top side. And then let's just say you took that profit and then after that, it came back down to the area and then you got into another buy. That's more profit. So that's the first reason. You locate areas of reversal where you potentially get into the market and get your profit, secure the bag. Now, the next one is looking for a break and retest. So let's say that price finally breaks through a level that you have marked up as a support and broke through. Now, what used to be a support, AKA a floor, is now a resistance level, AKA a ceiling. So it did take some time for price to actually get back over to this area, but we're here now. And what I'm anticipating is the market to go short side. That's what I'm looking for going into this coming up week. So when you see a break like this, recap, you look for, instead of getting in the middle of the move and potentially having the stock market, the foreign exchange market going against your favor, right? Instead of getting in the middle when it's already moving, wait for the retest, wait for it to come back to that level, and then get into your trade so that you can optimize your profit potential and minimize your risk as well. But you know, if you got in the middle right here, you're kind of in limbo, hoping that it continues down on this crazy path that it did. But as you can see, with all this other mess that's going on right here, prior to that, the market just doesn't shoot up or shoot down all the fucking time. Excuse my language, but it just doesn't. So why would you get into the middle of something when it's already moving, when it could potentially shoot down like this, make a strong ass move, and then shoot back up and then knock you out? Why not wait for a retest? Maximize your potential. That's the goal here, is when you maximize your potential and you hold your position, which is the third thing I'm about to getting into, that's when you can become a profitable trader. Now, the third thing, being confident in your positions. When you locate these areas, guys, when you locate these areas it allows you to have more confidence in your trades. And the reason why you're more confident is because you see the consistency of the price bouncing off of these areas and then going in the opposite direction. So why would you not be confident in it? And in order to locate where you should put your stop loss, I'll go over that in another video for you. Probably over this week. I'll make that one of the topics this week. But the biggest thing here is like when you locate your horizontal levels, you can get into a nice position and you've already psychologically, right? Psychologically made the agreement say, okay, if I have 100 grand in my account, I'm okay with losing 1%. I put my 1% risk on the chart, but my reward is, 3 times that. So you're looking at a 3% gain versus a 1% loss. So that's the goal here, guys, is to maximize your profit potential, minimize your risk potential, right? So there's that, guys. And the very last thing, guys, is for me, all of this stuff, as you continue to practice, you'll see that putting levels starts to get a little bit easier. But the biggest thing when it comes to trading is the psychological aspect. It's 90% psychological, in my opinion. When it comes to day trading, 90% psychological. And if you can establish levels and give yourself multiple confirmations that show you and give you potential hints at where the market will go, the more confirmations that you can get, the better. I'll leave it at that. I hope you guys found some good value in this. If you did, please like this, share this with as many people as you know that might have some interest in getting involved in the foreign exchange market, because all I would love to see is to have people be profitable and then turn around and say thank you to me just for sharing some information. I'll see you guys in the next video. Have a good night. It's time for me to go to bed. I'll holler at you later. Peace.